Everyone, I would like to call the meeting of the Audit Committee to order, please. Michelle, are there any public speakers?
Yes, Madam Chair, we have two members of the public registered to speak today. As a reminder, we ask that all public speakers adhere to the MTA's rules of conduct and decorum. I would also like to remind our public speakers that in the interest of time and fairness to all speakers, we limit everyone to 2 minutes. Please be aware that there will be a warning beep to remind you that you have 30 seconds to conclude your remarks. The first speaker will be Jason Anthony, followed by Jack Nierenberg.
Good afternoon, Jamie, and good afternoon to the rest of the Audit Committee members. Jason Anthony here. I'm going to make this short and sweet. Let's not forget that we should audit our debt, not making the same mistake like the Port Authority of New York and New Jersey, that they don't audit their spending. Let's say spending their money, because when their chief financial officer presents their financial report, it's unaudited. So let's not do the same mistake. And when we spend our money, let's spend it wisely. And let's do the auditing as it should be properly, because we are in, let's say, different times. So let's not be in a fiscal cliff. So that's all I have to say for this month. I'll see you in Capital and Finance.
Thank you, Jason. Our next speaker is Jack Nierenberg.
Good afternoon, everyone. I'm Jack Nierenberg. I'm the Vice President of Passengers United, and there are a few concerns that I want to bring up. One of them is the ongoing issue of the MetroCard vending machines not accepting cash, and they've been out for quite a bit, so that's something that needs to be investigated. And secondly, I'm going to make this short and sweet as well, the members of the Traffic Mobility Review Board. I was looking up their backgrounds, and unfortunately, I'm not confident that these people are going to be serving the people as they would be serving their own agendas with the congestion pricing issue. So that's something that I think needs to be investigated thoroughly. So I just wanted to bring that up. Thank you very much.
Madam Chair, this concludes the public speakers.
Next, we have the approval of the May 22 Audit Committee minutes. Any corrections or changes? May I have a motion to approve the minutes? A second? I will second. Approval? All in favor? Aye. Minutes are approved. Michelle, are there any changes to the work plan?
No, Madam Chair, there are no changes to the work plan.
Okay, first up, we have our independent accounting firm with 5 items that will require a vote. We will take all 5 votes at the conclusion of their presentations. Jill Strohmeyer, the managing director, will begin with the presentation of the results of the review of the first quarter 2023 MTA consolidated interim financial statements. The financial statements will be issued in the final form after the audit committee review and approval. Jill?
Thank you. Good afternoon. Deloitte is in the process of completing our quarterly review for the MTA's consolidated interim financial statements for the 3-month period ended March 31st, 2023. Just to remind the committee, a review consists primarily of analytical procedures and inquiries with management, so it's less in scope than an audit would be. Based on our reviews at this time, we are not aware of any material modifications that should be made to the interim financial statements for them to be in accordance with GAAP. And that concludes my remarks on the first quarter report.
Thank you, Jill. Are there any questions on the first quarter 2023 consolidated interim financials? Okay. Next, we have Jim McGovern, MTA Deputy Comptroller, to provide management's review of the 2022 employee benefit financial statements, including a discussion on management's analysis and the required supplementary information to the financial statements. Jim?
Hello, good afternoon, everybody. I'll skip to the next slide. There we go. I think there was one. So the MTA benefit plans basically have 4 financial statements to them. The MD&A, the statement of fiduciary net position, which is what we would refer to as a balance sheet, statement of changes in fiduciary net position, which is normally referred to as the income statement, notes to the financial statements, and required supplementary information. Right now, it's interesting, we might have skipped, there's 6 plans. The MTA Defined Benefit Plan, MABSTOA Plan, Long Island Railroad Additional Plan, the Metro North Cash Balance Plan, the MTA Deferred Comp Plan, which is the 401-457 plan, and the MTA Retiree Welfare Benefits Plan, which is the OPEB plan. So there are 6 benefit plans. All 6 have require audited financial statements. This schedule here that you see basically represents the net pension liability for each of the plans, and also includes the NISLRs and NICERs items number 5 and 6, which are the primarily MTA, transit, and B&T employees who are on those plans. At the end of December of 22, the MTA single employer plans have a net pension liability of $4.3 billion, funded ratio, this is a blended funded ratio, of 68.3%. The multi-employer plans have a net pension liability of $3.9 billion and are funded at approximately 82% blended. The only thing I want to add to that is that the percentages are slightly less than last year, primarily due to market conditions of the assets in the plans. The only other thing I do want to add to this is in 2023, we made 2 contributions to the plans. We made prepaid contributions to the defined benefit plan for 23 and 24 of about $1.3 billion, and we made a prepaid benefit plan to the OPEB plan for about $1.3 billion, not reflected in these numbers here, made in 23. That I think I'll just skip this plan in this slide for time. This kind of just shows you where New York State is relative to the rest of the country, which is in pretty good shape actually. And then the OPEB plans, we're not required to fund the OPEB plan, so we have pretty much a 0 percentage way. If there are any questions, I apologize for being quick, but I just wanted to get through the slides expeditiously. Thank you.
No problem. Thank you, Jim. Are there any questions? Sharif, do you have any? Okay. All right, and to continue the discussion on pension plans, Jill will discuss the results of the audit of the various pension plans. Jill?
Thank you. So Deloitte is in the process of completing our 2022 audits of these 6 employee benefit plans for the MTA. We are performing our audits in accordance with auditing standards generally accepted in the United States of America. We're not aware of any significant changes to previously adopted accounting policies or their application during 2022. If you recall from the May meeting, lease adoption was the topic of discussion. That does not impact any of your plan reportings for this year. We are not aware of any significant changes in accounting estimates or in management's judgments relating to such estimates. There were no uncorrected misstatements or disclosure items passed identified during our audits. There were no material misstatements that we brought to the attention of management as a result of our audit procedures. We did not have any disagreements with management throughout the course of our audits, and we received the full cooperation of management and staff throughout the performance of our audits. Upon approval, we will be issuing our clean audit reports later this month. And that concludes my prepared remarks. Happy to answer any questions regarding our audits of the plans.
Great, thank you. Jill, any questions? Okay. Next, Jill will provide the results of their federal and state mandated single audits of the MTA and New York City Transit. Jill?
Thank you. Deloitte is also in the process of completing both our federal and state single audits for the MTA for the year ended December 31, 2022. In 2022, MTA had a total of $12 billion in federal expenditures over numerous grant programs reported on your schedule of expenditures of federal awards. This is a $10 billion increase over the 2021 amounts, which was $2 billion in 2021. And this is largely due to the fact that cash received in 2022 related to ARPA and CRRSA programs, which increased the schedule of expenditures of federal awards this year. As part of the federal single audit, we selected one grant this year to be selected as major, and that was the federal transit cluster. We tested that grant in accordance with the 2022 OMB compliance supplement. The Federal Transit Administration cluster that we did test had $11.6 billion in federal expenditures. So out of a total of $12 billion that could be tested, Deloitte subjected to testing $11.6 billion, or 97% of the total awards. Furthermore, of the $11.6 billion that we did test, $10.5 billion was related specifically to COVID funding, the ARPA and CRRSA dollars. We had no findings related to our compliance work this year. Our internal report, or our Yellow Book report, will reference one finding related to a significant deficiency related to non-operating revenues, which we'll talk about in a minute when we get to the management letter comments. As it relates to the state single audit, the MTA had $188 million in state expenditures related to one program. We tested that one program, which was the statewide Mass Transportation Operating Assistance Program, and we have no findings both on the compliance or internal control side to report to the committee. If there are any questions related to our audits, single audits, I'd be happy to answer those.
Yes, any question?
Yes, the grant that you mentioned, as well as the program, they were randomly selected, or how does the selection occur?
So Deloitte goes through a risk assessment process based on, we take your total federal expenditures in any given year, and by each grant program, we select which one we'll test, and it has to do with dollar value, has to do on whether or not the program was highlighted as a high-risk program by the Offices of Management and Budget, as well as other factors. When did we last test it? If we did not test a large program in the last 3 years, then we'll select it for testing in the current year. So based on all of those factors, and this program was in fact a high-risk program by OMB because of the significant COVID funding that did go into the federal transit cluster. But every year we do tend to select a different program, and this year happened to be the federal transit cluster with the most dollars and the most COVID funding.
Makes sense. Jill will now provide a brief statement on the management letter reports and answer any questions you may have. Jill?
Yes. So Deloitte has provided to you our management letter comments related to our 22 audits for the MTA and its agencies. Just to remind the committee, there are 3 levels of internal control deficiencies, 3 severity levels, one being just a low-level deficiency, one being a significant deficiency, and the last one being a material weakness. I have no material weaknesses to report to this committee, and all the comments but one are a low-level deficiency, and just one being a significant deficiency. The one significant deficiency relates to controls over non-operating revenue accounts and reconciliations. This is a carry-forward comment from last year. However, there is just a slight difference in what we noted this year. Last year, the non-operating revenue accounts related to payroll mobility tax and other mansion and supplemental aid tax type revenues. In 2022, as I mentioned to the audit committee in May, we did note that management recorded an adjusting entry of $352 million related to FEMA revenue that was not recorded in prior years. As a result, that did carry over into a significant deficiency around internal controls over non-operating revenues. Management has responded with next steps and actions to take regarding this comment, and we are comfortable with management's response related to this deficiency. Between Metro North, CERTOA, FEMTEC, and TBTA, there were also 6 low-level deficiency comments related to account reconciliations, GASB 87 lease implementation, and other classification type comments. Our recommendation is to enhance the review controls related to these areas, including a detailed documentation supporting the amounts recorded in the general ledger. There are 4 other matters described in our letter related to legal expenses, interagency communication, succession planning within the accounting department. We're just bringing these to the attention of this committee because we do feel these are important, better business practices and other items that the MTA should consider and enhancements they should consider to improve the efficiency of financial reporting. And finally, there are 12 comments within this letter related to information technology, IT matters. They span several different systems, and they mainly relate to 5 areas: password length and complexity, expiration and parameters, the removal of accounts for transferred or terminated employees, periodic review and recertification of account access, segregation of duties, and finally, maintaining evidence of monitoring of automated scheduling and batch processing. All of these IT matters were mitigated by other controls or factors. If there are any questions specific to any of the comments within this management letter, we would be happy to answer those.
Okay, Sharif?
When you say the IT issues were mitigated by other factors, what do you mean by that?
Generally means there was a manual control in place by the accounting group, a manual reconciliation of sorts, or additional reviews that were done manually to mitigate the deficiency on the IT side. Lauren is my IT director, and I'll ask her to add anything if I missed anything.
No, I think the only other thing I would say is that in a lot of circumstances, there are multiple IT controls that address a particular risk. So if there was a deficiency in one of them, the other controls were noted to be effective, and therefore they also serve to mitigate the risk.
So in a case where you talk about where there have been employees who have been transferred or terminated, what other controls are there as sort of a backstop to make sure that those credentials are appropriately sunsetted?
And many times in that situation, we would look at what access that the terminated employee gained after their termination, if they entered into the system, made any changes, those type of things. And if we don't see any, then we're comfortable that no inappropriate changes were made that would impact the financial statements.
Can I suggest that we review these findings with IT and come back and make sure that if there's something we can do better, that we get on the list for IT to address?
That's fine, okay. So for the final item from Deloitte, Jill will brief the committee on the results of their review of the MTA Inspector General 2022 office operations and expenses based on agreed-upon audit procedures. Jill?
Yes, Deloitte has performed the agreed-upon procedures as prescribed to us by the MTA related to the IG's Office of Management and Budget for the year end December 31, 2022. There are 14 procedures that we're required to perform. Procedures consist primarily of comparing information to source documents such as employee and payroll information to HR forms and payroll registers, reviewing disbursements and petty cash vouchers for approvals and supporting documentation, and comparing Inspector General expense information to the MTA's books and records. We have no significant exceptions. We have no exceptions or findings to report to the committee related to our 22 agreed-upon procedures report.
Thank you. Jill and Jim, any final questions? You sure, Sharif? Okay. Okay, I need a vote to accept the 5 reports and recommend them to the full board for their approval on Wednesday. First, the first quarter 2023 consolidated financial statements. Secondly, the pension audits. Third, the single audit report. Fourth, the management letter reports. And fifth, the review of the MTA Inspector General's office. Do I have a motion to accept all 5 reports and recommend them to the board for their approval on Wednesday?
So moved.
Okay, a second. All in favor? Aye. The reports are accepted and will be moved to the full board for their vote. Thank you. We're not going to do presentations now. So next, we have Lamont Kearse, the MTA Chief Compliance Officer, who will brief the committee on the Ethics and Compliance Program. Lamont?
Hey, thank you. Given the lateness of the hour, I'm going to just note that the enterprise risk management, the financial interest report, and the open audit recommendations are in your book, and I'm here to answer any questions that you may have. But I will say that in each one of those areas, things are progressing well and are compliant with the various requirements that are applicable to each one of them. I would like to take a few moments this afternoon to talk about the ethics program, and I'm going to move through it rather quickly, but if you have any questions, please let me know. So we always start off with the core board responsibilities around ethics and compliance. So we're going to go back. Sorry. So these are the key areas that we covered. Since the last report to this committee, we've handled over 2,600 ethics issues or inquiries. As you can see, I'm going to go through very quickly. We deal with things called prohibited source events. That's when we are assessing whether it's appropriate for our employees to attend certain conferences or other types of events to ensure that it meets our ethical requirements. We continue to work with the Commission on everyone's favorite topic, financial disclosure, to ensure that everyone ultimately files their financial disclosure statements. We continue to manage MTA's conflicts of interest. I will note there has been a significant increase in the number of conflicts of interest that we've dealt with, what we call reverse two-year bar. Those are employees who are coming to us from the private sector and managing their relationships with their former employer to make sure that they're looking at our interests more than their former employer. We continue to look at areas by agency. Headquarters continues to be very active in terms of the types of reviews that we are doing. We are still managing inquiries versus issues. And simply put, an inquiry is when you come to us before you do something, an issue is when you come to us after you did it. And I'm happy to say that we have more inquiries than issues. Due diligence reviews by source. This is actually last year. Most of the information, most of the due diligence reviews came to us via email. If you remember last year, we told you we were putting in an automated system to help us manage that. So I'm happy to say this year, that automated system is taking in almost half of the due diligence reviews, freeing up my email to a great extent. So I'm happy to say that. The ethics request, that's the name of the system, handles a lot of the prohibited source events that I mentioned previously. We continue to manage outside activities. Since the last report, we've managed 422 outside activity requests from our employees. We've approved quite a few, we've denied quite a few, and we've had a few employees who opted, instead of having them denied, just to withdraw them. We continue to provide ethics training. We did 26 ethics training sessions, providing training to over 2,000 employees during the period. And that is my very quick presentation on the status of our ethics and compliance program. If you have any questions, I'd be happy to answer them.
Thank you, Lamont. Okay, last, we have Michelle Woods, the Auditor General, to brief the committee on status of the 2023 audit work plan. Michelle?
I do want to take a minute to thank my team, Darren Jurgens, Phyllis Richardson, Judy Beckford, and all of the audit staff. They've done a great job so far this year and have identified approximately $26 million in potential cost savings. In the interest of time, I will refer you to the book. Our full presentation is in the book, but I'm happy to answer any questions you may have. Good? That's it. Thank you.
Thank you, Michelle. Finally, we need a motion for the Audit Committee to adjourn. Second, please, and a vote? Aye. Okay, this concludes the Audit Committee meeting very quickly. Thank you very much for expediting. Bye-bye.